Hey, this is Derek with Vanport Capital, and I just wanted to do an update from the S&P video I did last week, where I talked about, I think at the beginning of this week, it was going to drop down a little bit and then move higher. And it pretty much happened exactly how I thought, with one exception, and there's a point I want to make about that. So this is the chart from last week, and what I talked about is the market was going to drop down and then go higher because this initial wave down off the October 3rd highs was clearly three waves. And any three-wave move is by definition corrective in nature. And sure enough, the market did drop a little bit and went higher. Now, the irony of this is, even though I had a good idea of what was going to happen based on the price action, I still lost money on the trade. And that, of course, that bothers me. I have an online fund. We run a fund. I just started this fund back in August. And I've been trading many years, 20 years. I've traded commodities for many years, stocks, grains, financials. Basically, if it's traded on an exchange, I traded it. I was a bond trader, institutional bond trader for a while. So I've traded lots of things. I've seen many markets. And I still lose money from time to time. It's a game of probabilities. And I could have just avoided talking about it and gone on with my business, but it's important to talk about because as a trader, you're going to have losses. If you think you're going to get into this business and you want to make money and you're not going to have losses, I'm telling you, pick a different field because it is the hardest thing to get used to. After 20 years, I still struggle with taking a loss, but it's important that you take a loss in the right way. Now, I made a mistake in that I had a technical glitch with my internet when I went to put the trade on, and I didn't think the trade went through, so I actually ended up trading more contracts than I thought. But no excuse, it was still a loss, and the market did do what I wanted it to do. It just didn't do it as far. Now, let me explain that a little bit better. So here's the chart it's an updated chart. It's currently today, which is November 8th. It's Thursday. And we were sitting right here when I made that video. And my thought was that the market would drop down a little bit more and then go higher. Now, why did I think that? And I thought that because of this. Let's drop down to a slightly shorter time frame. And the reason I thought that was right here. So we had a clear 1, 2, 3, 4, 5 wave move up off the bottom of 29 October. And typically, if this was going to be a wave 2, in order to satisfy the typical, this is not orthodox, but in order to satisfy the typical retracement, you want to see a minimum, typically on a wave 2, of a 50% retracement of wave 1. So this being wave 1, and this would be the end of wave 1 right there. And so you can see that the market only retraced barely, and this is the S&P 500, only retraced about 38%. So my contention is that even though I knew this support line was here that goes back a long ways, which should have been my first warning, this clearly did not look like it was finished. So I thought we would bounce along the support line, drop down to somewhere around the 50 to 61.8% retracement level, maybe even as far as the 78 right here where support would be, and then go higher. And so I shorted the market. I went short. And I went short right in here. And initially it went my way. We were profitable. Came up, bounced around. It was doing exactly what I thought, but then popped away and got away from us. And then here we were into the election. And it started to roll over at the end of the day on Monday. And so I stayed with the position. And the next morning we popped up, we gapped higher, and I knew if I was wrong that we were going to be in a wave 3, and I was going to be wrong big time. So I was a little bit flirting with disaster on that trade. So I just sold out right here, and I had to take my loss. And it's hard because I knew if I was going to be wrong that the alternate count was that this was the end of the downturn. We were now in a wave 3, and wave 3s are typically the most powerful wave within the 5-wave mode of advance. 3-wave mode of advance followed by 2 corrective waves. So for a total of 5 waves. And so I knew we were going to be in the 3rd wave. So as soon as I realized the next morning, I woke up and the futures were up 22 points before the market opened, I knew I was in trouble and I had to sell the position. And it was hard because if we look at my fund, we were on the verge of, on the verge of overtaking the S&P 500 that morning. And trading is a tough gig. It's a tough gig. I've had many instances where I've lost money, but I always end up on my feet. I have been doing this for many years, and typically my returns are in the triple digits. So this doesn't bother me as much as it might bother most people because I've been doing this a long time, but it still bothers me. You can see my fund at this point, year to date, I'm down 23%. That's hideous. That's a bad return. But folks, trading is a game of probabilities. And for every time you lose, you should learn something, become a better trader, and move forward. That's what your losses are good for. You need to learn something. So what did I learn from this loss? Let me point that out because it's important, because I did realize where I had made a mistake. Even after 20 years, I'm still learning because the market always changes a little bit as far as leadership, what's driving it, what's pulling it back. It's always technicals, in my opinion, after doing this for this many years, it's always technicals. But what technicals specifically? Well, let's find that out. So this is a chart of the QQQ and 15-minute chart. And so if we look at the same spot in which I made the video last week about what the S&P was going to do, is right about here. And so when we looked at the S&P chart, remember this retracement was very shallow. So one of the things you had to realize is what's driving the market higher, what is the market keying off of. And so even though the S&P and the Dow had shallow retracements for this wave 2, if we look at what the QQQ did in relation, you can see that it was almost at the 50% level. So it retraced much more. And if we actually look at the futures, let's zoom that out a little bit. If you look at the futures actually dropped down even more than 38%. So even though the S&P and the Dow had very shallow retracements for wave 2, the higher beta indexes had more significant retracements. So once they reached their 38 and 50% thresholds, the market turned higher. So the moral of the story is there's always something that the market's keying on. Or a lot of times you won't be able to really get a good wave count on one particular index. But there will be an index or maybe even a leading stock that will give you a very clear count that the market is keying off of, or that you can use to key the market. So let's say, for example, that the Dow, the S&P, the NASDAQ, they're all giving you, the wave counts are very choppy and overlapping. But you go to a major stock like maybe Google or Amazon or Apple, and you're like, well, the wave count is really clear on that. You can oftentimes use that to gauge where the market is because they are going to be in tandem with the market. That happens to me a lot. You have to find the one thing that you can read. And had I checked with the NASDAQ and looked at the NASDAQ before I made that trade, I would have seen that the retracement was, if we look at the futures market here, let's see what the retracement was on that. So you can see the retracement was 62% for wave 2, well into the threshold of between 38 and 50% of where wave 2 typically ends. So again, on the NASDAQ futures, we had the correct retracement. So the fact that I went short thinking we were going to go down further, when if the S&P went down and you think the NASDAQ was going to go down with it, that means the NASDAQ would have had to retrace about 78%. And it's difficult for that to do that because the semiconductors in tech is the darling of the market right now. And so people jumped on the bandwagon and drove it higher, and that's where we're at. The market's going higher. So it's hard to face a loss, but you're always going to have losses. Learn from them and move on. And I initially did not even want to do a video about a loss, but thank you, Amy, and you know who you are, and I love you. And you convinced me to make a video that is hard to make, but everybody needs to deal with it, because if you're going to be in this business, you're going to have losses. And if you can't deal with the losses, then you have no business being in this business, for lack of a better term. You've got to find something else to do, because you're going to have losses. It's a game of probabilities. And because of that, by definition, you're going to have losses. Deal with them, learn from them, move on. It's part of the game. It's a game where the river is always flowing. The fish are always there. They may not necessarily be easy to catch, but the fish are always there. And you've got to change. Just like in fishing, you have to change your strategy from time to time. Always keep your same basic strategy. Never waver from what works with you, but always try to make it better. Make yourself better, make yourself more money. And in order to do that, you have to learn. So now let's follow on to see what the S&P is going to do from here. So getting back to the S&P chart, you can see that we're climbing higher. And if I switch to a daily chart, let's take a look and see how far we are from the Let's get rid of this. The retracement, we already talked about that. Let's see how much we've retraced of the previous move. So the move from 3 October down to 29 October. Now this is another thing. Where do you put it? I like to have a minimum and maximum. So in order to get the minimum on a retracement, I drag this down to the furthest extreme of price action here. So you can see we've retraced 62%. Now why do I want to go down to there? It's because I want to see where wave 4, we're going to be going into wave 4 now of wave 3, because this would be a wave 3, this stretch right here, wave 1, 2, 3, and we're probably in a wave 4 here. Wave 5 of wave 3 will take the indexes somewhere up to here. And you can see that we stopped here, stopped here, stopped here. So there's a little bit of history in this particular area. But to give an even clearer idea of where the market might stop, I want to drop down to a smaller time frame, use the trend lines to my advantage. Let's just see where the market may stop at. If we line out these, you can see that it's never a coincidence about where the market stops, rarely ever. And this is how you should view things. So you can see wave 1, wave 2, wave 3 is still going strong. And outside of your outside trend lines, you should always have a center line. And the reason this is important is this is your thrust angle. This particular line here. This center line is usually your thrust angle. And what happens after a wave 3, you can see what wave 3, often the wave 2 will retrace and break through this thrust line. Wave 3 will often take you up at least to the thrust line. And when you start to pull away from this thrust line, you'll get into a wave 4. And wave 4 should take somewhere over to touch this other parallel trend line off this one, and then move higher in a final wave 5. And that's where I plan on riding this trade out. I have a trade right now in our fund. It's the Trendmaster Fund. You can follow us on Collective 2. It's the world's largest decentralized online trading platform. I just started the fund back in August, and it's been a rough start. I mean, it's really tough after 20 years to start and take losses, but unfortunately, that's what the market gives you sometimes. You're not always right. You're never going to be 100% right. So you correct yourself, you learn from it, and you move forward. So I hope to be positive by triple digits before too long and moving forward, and you don't look back. And you realize that mistakes are going to happen, losses are going to happen in the future, but there's always fish to be caught, and the water is always flowing, and so there's always money to be made. And so learn from your mistakes. We're going to watch this S&P move higher. Whether it goes to new highs or not remains to be seen, but I think we are there. I think we're going to see new highs in the S&P because this is 3 waves. And once we get up close to the highs of October 3rd, we should see some consolidation and probably what will be a wave 4. So that means this wave 3 that we're in that started here should take us somewhere up into this area here, that 2875 area on the S&P, 2877, somewhere in there before you start to see some consolidation, and then a final 5th wave that will end maybe slightly below, maybe slightly above the previous high of October 3rd, and that's when I'll be selling out of this position and looking to go short. So that's where we're at. If anything changes, I'll be the first one to bring it to you, I hope. And once again, if I'm wrong, then we should be able to get an alternate count. We'll move forward from that. And we're always learning. And you take 3 steps forward, 1 step back.